Hey YouTube, welcome back to my channel. My name is Sherelle Walker, an insurance agency owner and educator. And today we're going to be talking about a very important topic, which is the types of term life insurance. Term insurance or temporary insurance is one of the most common types of life insurance that you can get. And today we're going to be talking about the different types of life insurance policies so that you can pass your life insurance exam on the first try. All right, let's start with the most common type of term life insurance, which is level term. This type of policy, the death benefit and the premium is going to stay level throughout the entirety of the policy. And the policy can be 10 years or 20 years or 30 years. And if the insured dies during that time, then the death benefit will be paid out to the beneficiary. The next type of term life insurance is going to be decreasing life insurance. So, with this type of policy, the death benefit is going to decrease over time. Now, the reasons why somebody would have this type of policy is they might be protected for their mortgage or for a line of credit. And as they pay down the death benefit would also decrease because the debt is decreasing. For test purposes, if the test mentioned mortgage protection or credit, just know that they are talking about decreasing term insurance. Another type of term life insurance is going to be called increasing term insurance. This type of insurance policy, the death benefit is going to increase over time. So the amount of money that is going to be paid out to the beneficiary is going to increase over time. This type of policy may be used to help offset inflation or the insured's growing financial need. Another type of term life insurance is going to be called ART or annual renewable term. This means what it sounds like. The insurance is going to renew annually. The key thing to know about ART or annual renewable term is that it's going to renew yearly without medical underwriting, as well as the premiums increasing every single year as the insured gets older. So obviously term insurance is temporary. It can last 10 years, 20 years, 30 years, or however long the policy is. But what happens once the term is over? So depending on what type of policy you have, sometimes the policy, once it's over, that's just it. And you're done with the insurance. You have paid the insurance company. And because the insured outlived the insurance policy, then nothing is paid out. However, there is something called convertibility where you can convert your term life insurance policy into a whole life insurance policy. This feature is very valuable for someone who might not have the financial stability when they first get insurance, but then later on in life they do, so they convert it into a whole life insurance policy. It's also really good for the insured because there is no evidence of insurability needed, which means that there is no medical exam or no health questions asked at the time of converting the policy from term life into whole life. If you are studying for your life insurance exam, then this is something that you should be very comfortable with because types of policies is frequently asked in your insurance exam. It is asked actually a lot. I'm going to make another video about whole life insurance so that we don't talk about too much in this video, but make sure that you like and subscribe to this YouTube. Additionally, if you need some additional resources, I do have a life insurance study guide. The link is in my bio.